Okay, morning everyone. Looking at the US stock markets, the Dow has again recovered from the 23,500 points level. Since then, it managed to breach above the 25,000 psychological level, heading towards the 25,500 points. However, the lack of forward buying interest beyond that point has seen the Dow reverse its position below the 25,000 as well as towards the 24,250 points level. But on yesterday, on overnight itself, we did saw the Dow has gained about 0.1% or 30 points, mainly lifted by the higher crude oil prices, which saw gains in the energy sector that climbed about 1.4% overnight. So moving forward, we're expecting just a mild bargain hunting activities on the Dow Jones Index, given that it has fallen about 1,300 points level. We're expecting just a mild bargain hunting activities towards the 24,500 points level to see how it holds there. If the 24,500 points level cannot hold, then we might see further retracement on the Dow Jones back towards the 23,500 points level. On the S&P 500, we did saw the S&P 500 has recovered from the 2600 psychological level towards near the 2800 psychological level. However, similar with the Dow, we did saw the retracement on the S&P 500 just towards the EMA or 120 or around the 2700 psychological level, and it managed to see some of the mild bargain hunting activities on overnight. So moving forward, we're expecting further bargain hunting activities on the S&P 500 towards the 2750. If the 2750 level cannot hold, then we might see further retracement towards the 2700 or even towards the 2650 level. So on this on the crude prices, crude prices has again retraced from the high of 73 US dollars barrel level towards the EMA 120, which is around the 63 US dollars barrel mark. Since then, we did see the consolidation phase over the past 3 to 4 weeks trading period between the 63 towards the 68. And recently, the crude prices has made a good breakout above the 68. And on overnight itself, we did saw the crude prices has closed above the 70. The recovery over the past couple of days was mainly came after OPEC and Russia has decided to increase its smaller than expected production, while the gains on overnight, whereby the crude prices has rallied above the 70, came after US has encouraged its allies to impose a higher sanction on Iran. So moving forward, we're expecting a further upside on the crude prices. This could be the longer term breakout, pullback, and the continuation pattern that we're expecting the crude prices to trend back towards the 73. Should the 73 level were to be breached, further upside will be seen towards the 75 US dollars barrel mark. In the meantime, any pullback for now will be a healthy pullback of towards the 67 or 68 US dollars barrel level. Some updates on our local front. The FMKLCI has again entered a volatile trading session from the high of 1800 psychological level. It has seen the retracement below the 1760. Subsequently, it has tanked below the 1700 psychological level as well. And on last Friday, we did see the bearish engulfing candle was being formed on the FMKLCI, and the confirmation was noted on yesterday, whereby the FMKLCI has seen the further pullback after a choppy trading session. So moving forward, we're expecting some of the mild bargain hunting activities or some of the consolidation phase between the 1670 towards the 1710 level on the FMKLCI over the near term to see how it holds there, given that the US has seen some minor positive closing, and also the crude prices has seen some of the strong recovery. We're expecting some of the just a mild recovery on the FMKLCI to trend just between the 1670 towards the 1710 level. Until we can see a breakout above the 1710, only we can confirm for further technical rebound towards the 1760. But if the 1670 level will fail to hold, then we might see further reversal of on the FMKLCI towards the 1650 level. Given that the foreign funds is still on a net sell position, any gains will be just kept very limited at current juncture. Foreign funds has been disposing the Malaysian equities for the past 34 consecutive trading days. On the lower liners wise, it's traded on a similar manner. We did see a technical recovery towards the 14,600 points level. Since then, we did see the pullback happening again. And on yesterday or the past two trading days itself, we did see the MACD indicator has already issued the sell signal on the lower liners or the FM small cap index. Following this sell signal on the MACD indicator, we are also seeing the RSI has already tripped below the 50 level yesterday. So moving forward, we might see further weakness on the lower liners towards the 13,720 points level to see how it holds there before the next move on the lower liners. On stocks wise, we can watch out for some of the export related companies like Carex. Given that the ringgit has weakened beyond the 4 ringgit psychological level, Carex has seen the recovery from the low of 50 cents a level. Since then, we are seeing a potential bullish divergence signal. Price has been trading lower, but the MACD indicator throughout this period of time has been trading higher. Following this bullish divergence signal, we did saw Carex has made a good breakout above the 62 cents a level, and following the breakout of 62 cents, we are also seeing the short-term breakout pullback and the continuation pattern was being established on the Carex as price has recovered from the EMA 60 level yesterday, accompanied by some of the improvement in volumes. Following yesterday's breakout pullback continuation pattern formation, we are expecting Carex to trend higher, firstly towards the 85 cents. So should the 85 cents level were to be breached, further upside will be seen towards the 92, 93 cents level. The stop loss point will be pegged below the 75 cents level on Carex. Another export related company will be Pi Industrial. Pi Industrial is still on a downtrend formation, so any recovery from now will be just taken as a technical rebound play. Pi Industry has earlier been forming the lower high formation, but recently on yesterday we did see Pi Industrial has experienced the short-term consolidation breakout and subsequently breached above the recent trend line above the 1.30 ringgit level, accompanied by some of the rising volumes. Following yesterday's breakout above the 1.30 ringgit, any pullback for now will be a healthy pullback for Pi before the next uptrend resume towards the next the first target price will be located towards the 1 ringgit and 45 cents level towards the 1 ringgit and 53 cents. The stop loss point will be located below the 1 ringgit and 22 cents on Pi. On QL Resources is also as another export rated company. It has been forming the higher high and also the higher low formation with the uptrend intact formation being established since end of or early of September last year. And recently, QL has experienced a short-term breakout, pullback, and the continuation pattern was being established on QL that we're expecting a new high should there be a follow-through buying interest above the 5 ringgit and 94 cents, which was yesterday's high. Should price breach above the 5 ringgit and 94 cents, we're expecting a further upside towards the 6.20 or even towards the 6 ringgit and 40 cents level. The stop loss point will be pegged below the 5 ringgit and 66 cents on QL Resources. Last two company for today will be EcoWest. EcoWest is also still on a downtrend of formation, so any recovery from now will be just taken as a technical rebound play. EcoWest has earlier formed the hammer candle towards the from the low of around the 50 cents level. After hitting the intraday low of 50 cents, we are seeing a good recovery pattern on EcoWest as price made a short-term recovery towards the EMA 120 and subsequently traded on a sideways manner. But on yesterday itself, we did see EcoWest has formed a good bullish engulfing candle as price closed above the EMA 20 level, accompanied by some of the improvement in volumes. So for EcoWest, we'll be monitoring to see if there's any follow-through buying interest above the 67 cents level. Should price breach above the 67 cents, we can trade EcoWest towards the 76 cents or even towards the 82 cents level. The stop loss point will be pegged below these 60 cents on EcoWest. So last company for the day will be Equal. Equal has again seen a sharp rally from the low of around the 97.5 cents a level towards the high of 1 ringgit and 45 cents. After hitting the 1 ringgit and 45 cents, price has staged the healthy pullback and traded on a sideways manner. So for Equal, we need to monitor to see if there's any follow-through buying interest to breach above the 1 ringgit and 29 cents. Should price breach above the 1 ringgit and 29 cents, we expect the MACD indicator to issue a buy signal, whereas the RSI could be heading back above the 50 level as well. Should price breach above the 1 ringgit and 29 cents, then this could be the confirmation of the breakout pullback and the continuation pattern for us to trade towards the 145 and subsequently towards the 1 ringgit and 54 cents level. The stop loss point will be located below the 1 ringgit and 20 cents on our equal. If you have any questions, you can put in the chat box and I'll reply you shortly. If there's no question for today, there will be any morning briefing. Thank you.